The objective is to maximize total return from a global portfolio of long-term equity investments in order to provide shareholders with capital and dividend growth. In terms of a benchmark, the trust aims to achieve a greater return than the FTSE All-World Index over a 5-year rolling period or longer. Well, the portfolio managers strongly believe that very few companies actually matter. And that is because for several years they observed that both stock market returns and indeed their own portfolio returns were driven by the outsized returns produced by a small number of companies. That's now been backed up by academic research. Indeed, the same pattern holds true over the last 90 years. So really, the purpose of the investment process is to provide the managers with a framework that will help them to identify those companies, and when they do, be long-term and patient owners. And that process really starts with having a completely different mindset. The managers are resolutely optimistic about the world. In fact, they spend a lot of time imagining what can go right for a company rather than doing the easy bit, which is to talk about what could go wrong. Now, that thinking is then captured in a detailed 10-question research framework that is consistent, robust, and repeatable. And it's applied to all new holdings as well as existing holdings within the portfolio. Now, I don't have the time to go through all 10 questions, but briefly, the managers are thinking critically about the long-term upside by assessing how big the opportunity is for a company over the next decade and whether that is static or it's growing. What edge does this company possess and can it strengthen from here? Then they incorporate cultural factors and also ask themselves, what role will this company play in society? And finally, valuation. What are the long-term free cash flows that this company can produce? And does that add up to us making a multiple of our money from here? Then when it comes to portfolio construction, they're trying to weight the portfolio to probability-adjusted upside. Or in simple terms, they want their largest holdings to possess the greatest upside potential. As a team, they adopt a back the enthusiast approach and try to think critically about the outlier cases for some of these transformational growth companies. So as conviction builds, they let the winners run or increase their holding size. And a great barometer of health within the portfolio is when competition for capital is at its strongest. In terms of how the fund differentiates itself from the peer group, I think the single largest factor is probably an output of that process, and that is where it invests. Most competitors are global funds that are invested purely in companies that are listed on the stock exchange. Scottish Mortgage also invests in late-stage private companies and is allowed to hold up to 30% of the trust's assets in these investments at the time of purchase. And that's because the world of investing has changed. Online business models mean that companies are staying private for longer and more returns are being generated before companies go public. So our managers make use of the investment trust structure to access these returns for its shareholders. It's worth noting that unlike other investors that only invest in private companies, they don't have to exit a private company when it lists on a public stock exchange. They can simply continue to hold them and therefore lengthen the exposure to the overall growth cycle of a company. Well, this is a great question. And the first point to make is that all of the managers are responsible for bringing new ideas to the table. And all of the managers are deeply curious about the world. So they're wishing to explore the changes that might take place over the next decade and the investment opportunities that this could create. It's worth noting that the human mind struggles to cope with exponential change. But many of the truly great businesses that they are seeking deliver just that, whether reinterpreting the industries in which they operate or creating completely new ones. Fortunately, there are some individuals that think about nothing other than exponential change, and our managers try to spend time with them to best understand the future. Quite often, these are academics And Baillie Gifford has formed a number of relationships with academic institutions around the world, but these are also founders of transformational growth companies. And what managers are seeking to do is to build long-term relationships with these people. So let's just take an example. Tesla is a well-known holding, and it was first bought in 2013. For some time, the managers have been working with academics and learning about the gradual decline in costs and improvements of storage of renewable energy. Then, in Tesla, they met a company that could make widespread adoption of electric vehicles a reality. And over the years, they built domain knowledge, and that combined with bottom-up stock research created lots of new ideas that's now spread out into several investments addressing the future of transportation. So that's going into areas such as battery manufacturing or battery recycling, autonomous driving, or indeed now space exploration. And the same pattern holds true in various other areas, such as the intersect of information technology and healthcare, which could dramatically improve patient outcomes, or the widespread digitalization of our economy. Finally, on the typical holding period, the managers are seeking to make investments in companies over 5 years or more. And the average holding period of stocks within the portfolio has been well in excess of this time frame over the last few years, and indeed we would expect to see that pattern hold in future. We believe it is of critical importance to offer shareholders value for money, and to do that, we offer active management at low cost. As an investment trust, the ongoing charges are captured only once per year when the annual report and accounts are published, and the last available date was on 31st March 2021. At that time, the ongoing charges were 0.36%, and that was made up of 0.3% in management fees and 0.06% in the trust's other administrative expenses.